What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. With this video, I'm hoping to demystify the concept of the box when it comes to Stacey Burke's trading strategy. All right. Now, a lot of us are making this unnecessarily complicated. Okay, this is a very simple concept. All right, now let's check out these slides, and then I'm going to show you only two examples on the charts. All right, to try to drive home the main point of this video, which is to keep it simple. All right, every single thing that Stacey tries to tell you, we always turn around and try to complicate it, but it's meant to be simple. So keep it simple. The box, it's a simple concept that helps us identify the highest probability trades on the day of the trade itself, okay? The box is a simple high and low range that contains price over time, all right? So you can see here we have the previous day's high and the previous day's low, and that is projected onto the current day, which is the day that we are coming to the charts trading. All right. Now you can see we have a very clear low of the day and high of the day range. So we can project those levels, right? And we know that there is money sitting above or below the previous day's high and low, correct? Right? So we project those levels horizontally on our charts, and those levels form our box. All right. And you can see that price from this high of the previous day has stayed inside of this box until we get into the early hours of the New York session. All right. Maybe this is London, New York gap time, but by the time we're in New York, we're down here. This market's already started to break down. All right. You can see we have a false break of the high of the box, which is the previous day's high. So we've come up, we've broke out of the previous day's high, given a reversal pattern, and broke down going into New York. And we can get in on any one of these pullbacks, right, to take this thing lower. Once we take out the high of that box, the next most likely target is going to be the opposite side of the range, or the low of the box, okay? Now we can use a big box, such as the previous week or the previous day's high and low range, or we may have a smaller box on the day, which might be a previous session's high and low range, or the most recent high and low range on the current day before we get to New York, okay? Either way, the box is created by a clean high and low range, all right? So you can see this is just one day here. Tokyo has a high and low. London gives a high and a low, all right? And then price is contained inside of London's low and high range, okay? Until we get to New York, where we break the high of the London session before failing and going straight to the other side of the range. This would be an example of a clean, well-engineered 3-session setup, a pump, coil, and dump type of trade. All right. Now let's look at these charts, and I'm going to drive this final point home for you. Okay. And hopefully this is going to bring a lot of clarity to your simple daily process. Okay. So here we're looking at oil from last week and the week before. Okay. The first week and the second week of February. So you can see that this first week gives us a very clear high and low range. Okay. We project that weekly box. Okay. We project those weekly levels onto the current week or the next week. All right. And that creates our box. It's that simple, right? We have a high and we have a low. We project those levels. That's our box. You can see here that this market Monday, Tuesday, Wednesday finally breaks the high of that box. And then the market coils sideways and rolls over, right? And starts going the opposite direction. Now, if we were to zoom in on the week itself, you can see that Monday gave us a very clear high and low range, and we project those levels across our chart horizontally. That creates our box, and you can see that price on the entire day of Tuesday was contained inside of that box. We had an inside day, and then half of the next day is inside of that box before it finally breaks out going into the New York session, right? Breaks the big box and the little box, coils sideways, and breaks down in the London session and New York session the next day. From high of week to low of week, from high of day to low of day. This is a clean, clear, well-engineered chart. That's what we're trying to trade. All right. Now let's look at one more example. Here we're looking at the Euro USD. All right. And we're just looking at a single day. All right. So you can see here that Tokyo gives us a high and a low. The London session gives us a low and a high. And after that London session box is put in place, right? If we project those levels sideways, you can see price stays inside of that box until the New York session, right? So you see what I'm saying? The smaller boxes made of the previous session's clear high and low range headed into the New York session. New York gives a false break of the high of the London session before breaking down and taking out the opposite side of the range, aka the London lows. Okay, so again, this is a nice 3-session setup, really a 2-session setup, right? But you can still see clear as day. We have a box, a high and low box right here. Now, this is the thing. This is what you need to remember. A lot of us, what we're trying to do, we're trying to go to our charts on every single instrument and identify the box, right? But if you're on a chart and that box is hard for you to identify, meaning there is no real clear high and low range, all right, then you need to skip that chart. Okay, we're looking for a very clear high and low range, an obvious set of levels that can form that clear box for us. All right, if it's not clear, and you're having to think a lot about it. Where is the box? Would it be this low or would it be that low? You know, okay, it's that low. Okay, now what about the high? Because we got this high over here and this high over here. That's not what you want to be trading. You want to come and see a very clear high and low range. Okay, look how clear this low is and how clear that high is. There's that range, and you can see price is contained inside of that box. You understand what I'm saying? So there's your high, here's your high, there's your low. See how clear it is, okay? And then Monday, look how clear it is, okay? Even on this chart, we have this clear high and low in London. We have that box, all right? That's what's going to set this apart. We want to demystify the box, all right? It's a very simple, easy concept, but you have to filter out your pairs. All right. You don't want to be staring at a chart for 30 minutes trying to do a science project and figure out what's going on. All right. Scroll through your charts. If you don't see anything clear, you skip it. Sometimes you're not going to be able to trade every day. That's day trading, bro. You know what I'm saying? You're trying to preserve your mental capital, preserve your financial capital, and trade on the days it's easy to make money, right? Anyway, man, until next time, I hope you continue to free your mind.